Good morning, everyone. Welcome to Mortgage Monday, July 2nd. Today, our topic is condominium financing. And it will be somewhat of a short presentation. I do have a cheat sheet that I'll be reading from and be offering to everyone for their files, their clients, however it might help. It'll also be uploaded to the Elite knowledge base. So let's begin. At the end, we'll have time for Q&A. And during the presentation, if you have any questions, just type it in the chat and I'll go over them at the end also. Okay, condominium financing. Buying a condo in Hawaii is much different from buying a condo anywhere else in the US. That's mostly accredited to the unique characteristics of our condominium projects that our condominium projects possess. There are three types of condo classifications that will affect your financing options. That said, the category into which a condo falls will impact down payment requirements and interest rate. It's important for you to know that most mainland lenders do not have the experience required to lend on the majority of Hawaii condos. In fact, most mainland lenders don't even realize they can't finance a Hawaii condo until about 2/3 of the way through the escrow process, which is well after your loan has been approved. If you're considering purchasing a condo in Hawaii, working with a local lender benefits everyone involved. So the three condo classifications you need to be aware of are condominium warrantable. These meet Fannie Mae, Freddie Mac, FHA, VA, and USDA program requirements. The investors review the condominium documents that are recorded against the property, such as the CC&Rs, which are covenants, conditions, and restrictions, condo bylaws, public reports, budgets, income statements, insurance coverages, HOA board meeting minutes, and condo disclosure questionnaires to determine the financial stability of the condo. Condominium non-warrantable. These condos do not meet Fannie Mae, Freddie Mac, FHA, VA, and USDA program requirements, but may be eligible for non-conforming loan programs instead. More to come on that. Factors may make a condo non-warrantable are pending litigation against the HOA. More than 10% of the owners are delinquent with their HOA fees. The condo has timeshare or fractional ownership. More than 10% of the units have the same owner. And short-term rentals less than 6 months are allowed. Third classification is condo hotel. These do not meet Fannie, Freddie, FHA, VA, and USDA program requirements due to their hotel-like amenities, such as a front desk for checking in and out, an activities or concierge desk, and daily or weekly maid service. Due to Hawaii being a top destination resort community, many Hawaii condos operate as a condo hotel. These may be eligible for non-conforming loans instead. Okay, so now loan programs for condos. Of course, we have the conforming loans that are sold to Fannie Mae and Freddie Mac. The minimum down payment on these programs can be as little as 3% down. And of course, the lender will review the condo documents to determine the warrantability and approve the project. Non-conforming loans or portfolio loans are loans offered by banks and investors who are not Fannie, Freddie, VA, FHA, and USDA. The best terms that I've seen from these investors are 10% down payment for owner-occupant non-condo hotels, 20 to 30% down payment for condo hotels, 30% down payment for foreign nationals. FHA, 3.5% down payment minimum and owner-occupant only. The condo must be approved by FHA. If it's not, the HOA must submit for approval or provide necessary documentation to submit to the FHA. This is a lengthy process, and should be done prior to any applications being submitted for a loan, prior to any escrows too, if you know the client will need an FHA loan. Spot approvals per unit are not allowed, and the FHA does maintain an approved condo list. The website address is here, and you can type in your zip code, state, and it'll bring up all the approved condos, as well as previously approved and denied condos or expired condos on that database. VA loans, no down payment required and owner-occupant only. Condo complex must be VA approved, which can also take months to do. Spot approvals per unit are not allowed. VA also maintains a condo approval database that can be found at this email address, this website address. And USDA, no down payment required and owner-occupant only. Condo complex must be approved by one of the agencies above, since they don't do their own approvals. The condo must be in a USDA rural eligibility area, and borrower must meet income and debt ratio limitations. And below is a map of the USDA eligible areas, a link to maps where you can look up if the condo is in the area that you wish to purchase. Condo insurance requirements. Of course, the monthly maintenance fees for a condo will have the master plan of insurance that covers the structure. However, lenders require that the interior of the unit also be insured because it is securing the loan. That insurance policy is called an HO6 policy. Individual borrowers must obtain the HO6 policy in addition to the master condo insurance policy. Similar to a homeowner's policy, it covers the interior of the unit that is normally not covered by the master policy. It should also include any loss due to hurricane. Items covered are walls in, such as fixtures, flooring, cabinetry, and upgrades. It can also cover personal property. This insurance is fairly inexpensive. And flood insurance. The master insurance policy should have this covered, but in many cases, the coverage is short of the lender's requirements. If so, a flood gap insurance policy must be obtained to make up the shortfall. Okay, so that is basically it. Now, if you guys have any questions, please let me know. Either just mention them or chat, type it in the chat. I'll read it from there. Okay, no questions. All right, well, if there are any later that come up, please feel free to email me, call me, or text me. I'll be getting back to you with your answers. And our next Mortgage Monday will be July 16th. Topic is yet to be determined. It'll be another helpful one, hopefully. And thank you very much for joining today. Condo Financing. And you have the rest of the day right back to you. Aloha.